Everywhere you look these days, you're gonna see the same headlines: double-digit unemployment, a surging second wave of this pandemic here in Canada, hundreds of thousands of Canadian businesses at risk of closing their doors forever, and our economy is in lockdown. So the question is the Canadian housing market going to crash in 2021? Hey guys, welcome back to the channel. My name is Brad McCallum and I'm a realtor right here in Calgary, Alberta. And listen, if you're a subscriber, I get it. I know you normally come here for those gorgeous luxury homes that my wife and I and my team take you through. And listen, I just want you to know the channel's not changing. We've got some exciting tours coming up, including the 4th episode of $1 Million Tours launching in just 2 weeks. So please, like, subscribe, and do the bell thing so you don't miss any videos in the future. But the reason why I'm popping on here today is because I just got to talk to you about this question that I just keep getting asked almost daily. And that's this: are Canadian housing prices going to crash in 2021? So listen, as I mentioned at the beginning of this video, there are plenty of reasons to believe that housing should go down based on all of these headlines. Now, you can be forgiven for thinking that if people are living on government assistance and businesses are closing down and no one can go to work, that yes, housing prices should drop, but you'd be using something called common sense. And that's your first mistake, because logic doesn't seem to dictate anything that's happening in our market today. Something is going to crash in 2021, but it's not the prices. It's the affordability. You see, myself and a growing number of other experts from across this country believe that 2021 could show a real rising of the housing market here in Canada, especially in markets like Calgary, Alberta, which is kind of crazy because we've pretty much been flat for a decade. So now let's break down the 3 reasons why I believe prices are going up. Before we do, guys, I'm not an economist, so let me be clear on that. But every day I do advise my clients on what I'm seeing happening in the market. Now, I base that opinion on the data that's happening locally and nationally, as well as government policies and how they can affect the market, as well as following along with some of the best thought leaders in the Canadian real estate space. Guys like Steve Saretsky out of Vancouver. So just take this for what it's worth. But keep in mind, almost every expert this last year has been proven wrong, including the CMHC. An 18% drop in housing? Like, serious, guys? This leads me to my first reason. Optimism is returning to the market in 2021, and it begins with the vaccine. Now, if you remember that failed prediction from the CMHC of all the housing going down, well, the last part of that prediction I believe is actually true, where they said once a vaccine is announced, we'll begin to see a recovery in the housing market. And so based on current estimates from the government, everyone in Canada who wants to be vaccinated can be vaccinated between September and December of 2021. Now, they're even saying that they're able to potentially accelerate that timeline. And with frontline workers and those who are most at risk beginning to get those first doses, it's starting to feel like the end is in sight. And we cannot underestimate the power of optimism in our marketplace. Consumer spending makes up almost 70% of our modern economy. And so think about what's happened lately. People have been spending less money on cars, on going out to eat, on gym memberships, commuting to work, all of these things because the economy has been in lockdown. One good result has been that Canadian savings have went from 3% in the past, which is like really low, to over 28% during the pandemic. And it's not just the lockdowns that prevented the extra spending, it was also the simple fact that people didn't feel confident about the future. If you're not sure if you're gonna have a job in 6 months, well, you're probably gonna hold onto your money. And this all seems to make sense until you look at the Canadian housing market. Remember that despite all of this, Canadians were more than happy to spend that money on housing. So the real estate market rallied across Canada, even right here in Calgary. And I say that because for years now, Calgary has been in a prolonged downturn. And this last year, despite all of these challenges, things are starting to look up. I should just say for a second, if you're one of my international viewers and you've heard lots of positive things about the Canadian housing market, what you should remember for the rest of this video is that Calgary was that one lone spot that really didn't participate in those epic double-digit gains that the rest of the property market had in recent years. In some cases, you can buy a house today for what you could have 10 years ago, which is just kind of crazy, but that's all starting to change. A rally like this doesn't affect all the home styles equally. In fact, there's been some winners and some losers. Single family homes have been the biggest winner during this time simply because people needed more space. Families were now at home all the time. They were working from home, working out from home. They had classrooms for their kids in their kids' bedrooms. I mean, everything sort of changed. And that also meant that a lot of people weren't wanting to spend their time in those tiny apartment condos now that they didn't need to be so close to downtown. In markets like Toronto, for example, where there's been huge gains in single family homes, apartment condos are actually down 9% from their high. So 2021 will see an end to the lockdowns. It's also gonna be a return to a bit of a new normal for us. It's probably never gonna be exactly like what it was, or at least not for a while, but the population will be vaccinated. And as that return of demand happens, optimism will grow, and it will all grow on the backdrop of a strong housing market that thrived across Canada in the middle of the pandemic. It's going to sound like we're having a banner recovery because year-over-year reports for real estate sales, travel, new automobile sales, even demand for things like oil and gas, all of these things are going to rise in this economy that's starting to come back to life. So all of this could easily translate into a demand for real estate that is greater than the supply coming onto the market, meaning prices could rise. So I should just say, if all of this sounds like backwards day to you, you're right, because the economy has taken a major hit and it shouldn't just so easily bounce back. But there is one more market force that is so strong and it completely underpins our entire economy that we need to talk about, and that's low interest rates. That's right, the second major reason on why housing could rise quickly in 2021 is simply monetary policy. Now, I know this sounds boring, so please bear with me for a little bit because I'm gonna try to make this as interesting as possible for you, but here's the breakdown. So the Bank of Canada, which is Canada's central bank, essentially they have one policy tool, the ability to set the overnight interest rate. And right now, that's set at 0.25%. So when a country enters a recession, like we did here in Canada, the central bank will often lower the interest rate in an attempt to stimulate the economy. This is called quantitative easing. That's right, or QE. So I think for the rest of this video, I'll call it QE. So I'm just gonna read this next part directly from the Bank of Canada's website because it's really important to understand. When the Bank of Canada changes the overnight rate, it affects the full spectrum of market interest rates. Everything from the yields on 30-day treasury bills to 30-year government bonds, to 3-month GICs and 10-year home mortgages. When the interest rates falls, firms and households increase their demand for credit and commercial banks increase their quantity of credit supplied. So what they're saying is simply this: they set the overnight interest rate, which is currently at 0.25%, and that has a massive impact on every loan in Canada. And this is how it really stimulates the economy. See, people spend more money when the cost of borrowing that money is cheap. So they'll go on trips and they'll buy new cars and they'll buy new houses and they'll go out to eat. They'll go and do things that cost money. Same thing with businesses. They'll hire on more people, maybe build a factory, invest more money into research and development, and that stimulates growth in the economy. But on the surface though, you can see why it would work. And we're seeing that right here in Canada as we speak. Just the other day, you may have seen on the news, HSBC is offering a 0.99% interest rate. To think of it being under 1%, that's nuts. When I got my first mortgage in like 2004, I think I was paying like 6.2%. And at the time, that felt really, really cheap. So you might be thinking, Brad, come on, interest rates are low now, but they could easily go up tomorrow. Well, in reality, the Bank of Canada has said, listen, we're not even considering raising rates until 2023. That's over 2 years from now, and that's a strong signal to the market that it's safe to go out and spend. So not only does this make housing more affordable through cheap borrowed money, then increasing demand, causing prices to rise, it also makes real estate as an asset more attractive. So QE, or quantitative easing, said it right this time, it cheapens the value of money, but it raises the value of other asset classes. And that's why this strange phenomenon happened in 2020, that the world's billionaires, especially right here in Canada, their net worth increased by 30% this last year. And that's simply because they don't trade in money, they trade in assets, not like the rest of us who are working generally for a wage and operate our lives based on cash. Let me illustrate for a second. Let's say you have $100,000. Now you'd like to get some returns on that money, but you are completely risk averse. Well, in the past, you'd buy something called a GIC. That's a guaranteed investment certificate. And usually you could expect 2.5% to 3% returns. Now, you're not getting rich off of that, but you are protecting yourself against inflation. Well, these days, because of that low overnight interest rate of only 0.25%, the banks are only offering 0.6% on that $100,000. But it's going to require you to lock up that money with the bank because you're in effect giving them a loan. So let me ask you, would you give away $100,000 of your money to just get $600 return a year down the road? Well, probably not. You're going to look for a different asset class that's going to protect your money and offer you a better return. That's why we see things like silver and gold and Bitcoin and housing all going up in value at times like this. It's because capital is fleeing cash and looking for a place that they can get better returns. This is why I believe that it's housing affordability and not housing prices that are at risk of crashing in 2021. You see, the world economy has been hit. It's just been decimated. And as a result, low interest rates are going to be here for some time to come to try to help that economy recover. Before the pandemic, housing affordability was already a problem, especially in markets like Toronto and Vancouver. So now the government is dealing with a far greater problem than affordability. And because of that, they're using policies that are inflationary by design. They raise the value of other asset classes. And that means affordability, unfortunately, is just going to be exacerbated further. As a human being, this is where I'm so torn, because the pandemic has adversely affected people on the lowest rungs of the income ladder the worst. Those people are usually renters. While the economy and Canadians try to grow back from this event, that dream of home ownership, the path to wealth for the average Canadian, could easily grow out of reach. The reason I say I'm torn is because I actually live and work in Calgary. And so I've seen friends lose their jobs. I've seen businesses close their doors. Ever since I started as a realtor 3 years ago, I've actually seen that it's only been a buyer's market, and I've watched sellers lose equity in their homes. In some cases, they're underwater on their mortgages. That's actually why we go to such great lengths with our video marketing, because we need to get people's attention so they buy my client's home instead of one of the other homes on the market. And we've been very successful doing that. But the good news is that I do believe that because of these market forces at work right now, that there is some relief on the horizon for Calgary homeowners. Let's talk about that third reason that I believe is going to bring increased demand to housing in Canada, and that is immigration. Now, obviously, this last year, immigration due to COVID really dropped. In fact, it went as low as 64% lower than the year previous. However, the government of Canada have set some huge targets for immigration in the years of 2021, 2022, and 2023. That number that they're targeting is over 400,000 per year. So think about that. 3.3% of our population will be brand new landed immigrants in just 3 years' time, if the government hits those targets. Immigration creates growth both in the housing and the labor sector. Now in Canada, we have an aging population, so attracting new immigrants is great because it attracts new ideas, new money, and new investment into Canada. You add that all up and the economy expands, right? And every last one of them will need a place to rent or a place to buy. So the question remains, how will this impact you and your family in 2021? It really depends on who you are, where you want to live, and what kind of home you want to buy or sell. Now, if you're in Toronto or Vancouver, you might think, man, prices have went up so high they could not possibly go higher. But in reality, based on these three market forces, They probably will. Now, Toronto and Vancouver are very unaffordable for most people, and affordability is probably gonna get worse. That's why, because of my YouTube channel, people are reaching out to me all the time from both those marketplaces, taking a second look at places like Calgary because of the affordability. Calgary has often went through ups and downs because of the business cycle of oil and gas. Now, as we're coming out of this downturn, we're seeing that there's a stability around natural gas prices and oil prices. And in 2021, we should see an increased demand, which will be good for our local economy. But on top of that, Calgary has been working at diversifying away from just the energy sector, and we're starting to attract great technology investments with local success stories like Benevity. Calgary is a beautiful city. It has a beautiful downtown, and it is located close to the Canadian Rockies. On top of that, it's got a very highly skilled workforce, the most educated in the country. They enjoy the highest median income of any Canadian city. Even more important than any of those factors is that Calgary is one of the most affordable cities in Canada. Inventory has dropped 16% in the real estate market in recent months. That brings months of supply from 5.5 down to 3.5. And pricing has been relatively flat this year despite all the bad news. But in the last few months, things have really started to tick up. You know, it's really hard to imagine a more favorable time for someone to invest in Calgary. We're at the end of a long business cycle, and that's created some of the lowest prices in homes that we've seen. We're in the middle of winter, in the middle of a second wave of a pandemic. The truth is, many homes are moving very quickly now, some in just a day or two. At least that's been my experience. And so if this continues, this market into spring, when the optimism and the immigration and the local economy starts to boom again, it could make Calgary a very attractive investment. So look, I know I'm a realtor and you might be thinking, Brad, you're just trying to sell me a home, but I promise you the purpose of this video is not to do that. The real reason why is because real estate and that dream of home ownership, in truth, it's the path to wealth and economic security for the average Canadian household. If you've been waiting for the market to crash so you can buy in, unfortunately, I just don't see that happening. If you've been sitting on the sidelines, now is the time for you to probably consider your options, because if you wait too long, those options might start to run out. Look, I'd love to hear your thoughts. What did I get wrong? What did you think of this kind of video? What do you think is gonna happen in 2021 to the Canadian housing market? Just leave those comments below. And if you have any other kind of ideas for videos like this, just let me know. If you are thinking about selling or buying a home here in Calgary, listen, myself or someone on my team, we would love to help you in that process. And if you're in another market and you need to work with an agent that you can trust, reach out to me. I'll point you in the right direction. I've got a great network of agents all across Canada. In 2021, we will be including some more of this type of content, but don't worry. There is no way we're gonna stop creating those amazing video tours for you to enjoy. My wife and I, we just love them too much. In fact, our 4th episode of $1 Million Tours, an incredible $2.9 million 5,500 square foot modern acreage home. You guys are in for a treat. So if you don't want to miss that video or any of our future content, all you got to do is hit the subscribe button right there, hit the bell so you get notified every time we upload. And if you want to watch more videos of homes currently on the market, just check out that playlist right there. It's a good one. Or check out some of our past $1 Million Tours below. And hey guys, thanks for watching. And boy, this was long, like really long, really long.